Hey, it's Bob Nachman from NNP Wealth. Just wanted to provide a quick update from the video that we posted a few weeks back. During that time, I had mentioned that we were looking for really 3 events to take place in order to see a stabilization in the market as well as hopefully a gradual recovery in the economy. Those 3 events were monetary policy from the Federal Reserve, stimulus from the government, as well as some signs of containment in the virus, slowing of the curve, and the potential for a gradual return to work in a reasonable period of time. Since that video, we have seen progress on at least 2 of those 3 events. 2 weeks ago, the Federal Reserve announced what I would call an open checkbook policy, basically saying that they were willing to provide unlimited resources for an unlimited period of time in order to provide plenty of liquidity for the cash and bond markets. And as a result, we have seen across Wall Street a much more stable bond market and trading environment that seems to be pretty well improved at this point. Last week, or maybe 10 days ago, we saw out of Congress and the White House the CARES Act, really an economic stimulus package that's providing support for both small businesses, large businesses, as well as for those who've been unemployed. I think it's a successful package. It's going to provide a lot of funds into the system particularly to help small businesses and large businesses survive, as well as to get some income into the pockets of those who are in need, who've lost their job. The third piece, the containment of the virus and therefore a return to work, that's still unknown. We have seen a little bit of evidence just in the last 24 hours that we might be seeing the spread slow, particularly in some of the major cities like New York City, but it's probably a little bit too early to tell. Personally, even though I'm not a doctor, I gotta believe that the social distancing and quarantining that's been going on in our country, although maybe not at 100%, is going to prove to be helpful, and we'll start to see continued signs of improvement. If that's the case, and if we could see even a gradual restart of the economy over the next 30 to 45 days, I think that would be an important piece of the puzzle to get back in place so we can get back to work. Right now, we are recommending certain strategies while the market is down. The first of those is to rebalance portfolios. What's happened is if we had a portfolio that was 60% equities, 40% fixed income, thanks to the market, that portfolio is now probably 52, 53% equities. We think this is the right time to, at a minimum, rebalance back to those targets. For long-term investors, we are also recommending slowly investing in equities when we're down substantially, and doing that in small increments since nobody knows where the bottom will be. And third, we are recommending tax and planning strategies to take advantage of while a portfolio is down. We've posted some videos to this effect, and if you haven't heard from your advisor on this subject, you will be with what might make sense for you. Please continue to send us your questions. Please stay healthy, hang in there. We're confident that we will get through this and see better days ahead. Thanks.